The rules for getting a business loan are changing all the time. So here is what's working this year. If you want to get approved for any business loan, I want to really insist on that. Any business loan, whether it is a business loan, traditional business loan, or a business line of credit, or equipment financing, or anything of that sort. Here are the top factors I want you to pay attention to. The first thing lenders pay attention to, and not a lot of small business owners know about this, but lenders will look at your debt to equity ratio. So your debt to equity, your DTE ratio, and your debt to equity ratio, the lower, the better, because your equity is actually the denominator of this fraction, which means when you have a low debt to equity ratio, that just means you have more equity than debt. And if you have a high debt to equity ratio, that means you have more debt than equity. Now, if you are a small business, if you're a single member LLC or a multi-member LLC, chances are you don't have investors. This is not a publicly traded company, but you still have equity. So your equity will be the money that you put into the business yourself, right? So lenders will look at how much debt, how much liabilities you have compared to your own money. So that's what your debt to equity ratio is. So the lower, the better, okay? So mind your leverage when you contact business lenders. The second thing is you want to make sure that you have liquid assets. So when you think about liquidity is a pretty important notion for lenders because it tells them that you can actually monetize whatever assets you have and actually get actual cash in case of emergency. So when I talk about liquid assets, I'm talking about cash. I'm talking about marketable securities like stocks, bonds, and I'm also talking about other accounts receivable, for instance. So because your accounts receivable can be monetized, can be transformed into cash. That's what liquidity means. Liquidity means you can transform an asset into cash. And usually you are speaking about short-term assets, current assets, because long-term assets take a little bit of time to actually convert into cash. But so lenders will pay attention to that. So if something were to happen, can you actually monetize certain assets real fast? Like accounts receivable or inventory, for instance, you can monetize those because if you have MCAs, for instance, or you have revenue-based financing or invoice factoring or accounts receivable financing, you can actually use those conduits to actually convert your assets into cash. And you also want to build a cash buffer. So if you want to really increase your likelihood of being approved for a business loan, you got to have a little bit of cash. I mean, if you want cash from a lender, from a business lender, you got to have a little bit of cash yourself. So if you want to get approved for any business loan this year, so besides your leverage, besides your liquid assets, besides having a little bit of a cash reserve, you also want to offer solid collateral. That is, if you have assets that you can pledge, if you have business assets that you can pledge, they will really speed up the approval process because lenders are always worried about default risk, right? Something were to happen, they lend you money and you can't repay the loan. So that's a loss for them. So basically, if you have assets that you can actually collateralize, that just means that something were to happen, lenders can seize those assets and actually recoup some or all of their the money they advance to you. Okay, so if you can offer some solid collateral in terms of short-term assets or long-term assets, that's really good. When it comes to a collateral, the longer the term, the better. Like if you have a fixed asset such as a house or plants or machinery to actually pledge as collateral, lenders love that compared to short-term assets. Okay. And you also want to share your history. So if you are really talking about if you want to get a business loan, ideally you want to get approved with your EIN only, right? But if for any reason you think that displaying or disclosing your personal credit score can really help in the process, do it, right? I mean, you can really disclose that you have a FICO score of 750 or 800 or 825. The more, the better. So this is really good. If whatever can help you get approved for a business loan, you want to use it to your advantage. Okay. If you have good credit, mention it. If you have bad credit, don't mention it. If you have a good business credit, a good business credit score, mention it. If your PIDIS score is around 90 or 95, mention it. If your Equifax business credit score is high, mention it. If your Experian business credit score is high, mention it. Okay. If your FICO SBSS is also pretty high, mention it. The more, the better. Like whatever can really help your case, you want to mention it. Okay. You want to choose the right lender too. If you want to be approved for any business loan this year, it's important to pay attention to the lender you reach out to. Ideally, you do not want to really go to banks or credit unions because even though they're cheaper in terms of APR, they will take longer to approve you, and they have stricter requirements such as a FICO score and also financial suitability criteria. So if you want to be approved for any loan this year, it's important to really pay attention to the types of loans you apply for, right? Because every loan is different. Every loan has a different, I would say, requirements criteria. Okay, so for instance, if you were to choose, let's say, an SBA loan, that means you are asking the federal government through the small business administration to guarantee your loan up to 80%. That's what an SBA loan really is. An SBA loan means that you are really dragging the federal government into your business loan application process, which means it's a good thing and a bad thing. And a good thing in the sense that if you're having the support and full backing of the government of the United States, that just means that lenders will be more willing to lend to you, and the government will guarantee your business loan, up to 80%, which means you have to put a little bit of down payment, like 20%. Okay, so but that's kind of cool. So if that's what you want, especially if you want to apply for a large loan and you actually fulfill the conditions that the government has put in place, go for an SBA loan. An SBA loan actually has several variants, and the loans actually go from $50,000 all the way to $50,000 all the way to $5 million. You also have a traditional bank loans. Okay, this is actually another way of actually getting business funding. You have business credit cards. You have lines of credit. You have micro loans. And one thing I want to mention here is that, and not a lot of, people mention that, but you do have a large network of business lenders. They are not traditional banks. They are not traditional credit unions. You are talking about online business lenders. You are talking about alternative lenders. You are talking about online loan marketplaces. In the last 5 to 10 years, those are players that have actually occupied the field real fast and in big time. For instance, if you take National Business Capital, if you take Lendio, if you take Clarify, if you take, there are so many business lenders out there in the alternative space that have actually have done a great job at giving funds to business owners real fast. Of course, the APRs are higher though. They tend to charge more, and they tend to even charge you origination fees, but they're really fast at actually moving funds from financiers, those who have the money, to those who need the money. So that's pretty good. So what's the strategy here? If you want to be approved for any business loan, you got to have a strategy. And the strategy is not just about just writing things down. Or no, you have to really understand that the loan that you choose, the type of loan that you choose, has more beyond the requirements. Because the requirements are one thing, like requirements in terms of FICO score, requirements in terms of financial suitability, requirements in terms of use of loan proceeds. But there are other factors, okay? So when you think about the primary requirements, those are pretty fine, right? But you got to also think about the loan purpose, the approval time, the eligibility, the interest rate and fees, and the repayment flexibility. Can you imagine that there are some lenders, some business lenders, especially in the alternative lending space, that is online lenders among others. They charge you. They actually ask you to repay the loan or the line of credit on a daily basis. Okay, this is something new because before banks were known to offer monthly payments, okay, or quarterly, or in some cases even annual payments. Like in the case of business lines of credit, if you had a solid relationship with a bank, the bank could actually just look at your account and just ask you to pay whatever you owe on an annual basis if you have a business line of credit. But when it comes to the new crop of business lenders, those alternative lenders, those boutique lenders, they charge you on a daily basis. That's pretty good. That's good and bad. It's good in the sense that it really lowers the risk premium for them, right? Because the more often the customer pays the loan back, the better or the more reassured they are that they will be paid, right? But from a customer point of view, that really creates a certain disruption when it comes to liquidity management, which means what? Which means if you're a business lender and you accept to terms of daily repayments, you better be really careful. You better know how to manage your business, your finances, okay? Because they will be taking money out of your account every single day. So that's really something that you have to pay attention to. You also need to determine what your business needs. If you want to be approved for any business loan, you got to have a clear idea about what your business needs and what it needs it for. Okay. So, in terms of amounts that you really need, like let's say you need $1 million and you need $1 million for this and that and this and that. You have to be as granular as possible, not just because of the lender, but also for yourself. So, if you want to be approved for any business loan this year, you have to really also understand that the business loan purpose is important to the lenders, but it's important also to other key stakeholders. Okay, because the thing is that lenders, of course, want to know the use of loan proceeds. That's understandable because if they are gonna give you $1 million, they want to see that you're gonna use the $1 million to expand, to scale, to advertise, to get more customers, so you can make more money, more revenue, to be able to pay back the loan that you just got. So it's understandable, but the loan can also be a criterion that some stakeholders, for example, grant makers, or let's just say donors. Like if your company were to apply for a grant, some grant organizations want you to have a certain profile when it comes to finances, a certain financial profile. Like they want to have a low debt to equity ratio, for instance. They want to have all kinds of financial ratios. So you want to make sure that you are pretty clear about the loan purpose. You also want to really get things done in a certain way. And I want to insist on that. What I want to say here is that I want you to really understand that it's all about so business loan pre-application. So you want to really gather the paperwork that's needed to actually start applying for a business loan. And this is important because you are speaking about a soft pull process. No hard pull. Okay, your social doesn't matter anymore. So whether you have bad credit or fair credit or even good credit, in case the lender wants excellent credit, it wouldn't matter anymore because your EIN, your employer identification number, is actually the criterion that the lender is going to look at, right? So besides your EIN, because by the way, your EIN is your company's social security number. So besides your EIN, you also have to gather certain things like bank statements for the business and potentially the owners. So we're speaking about 6 months, in some cases 12 months, depending on how much you want to borrow. If you want to borrow like a 1 million or 10 million or even $50 million, the more money you want to borrow, the more extensive the paperwork that the lender is going to ask you to produce. Okay, and so remember that also the tax returns and bank statements. Okay, bank statements for like tax return, business tax returns, of course. So we're speaking about your 1065, your 1120S, your 1120, or anything else. If you file as a sole proprietorship, you might have to show your 1040. The financial statements for your company. So we're speaking about cash flow statements, your balance sheets, and your income statements. Again, we're speaking about the business, okay? You may need to produce actually legal documents such as articles of incorporation and business licenses, and also forms of ID to underwrite and validate your business. In other words, lenders wants to make sure that you have authority to actually make decision for this particular business. So if you want to get approved for any business loan this year, it's important to really understand that the loan application process depends on the type of loan that you are getting. For instance, if you're getting a merchant equipment financing arrange, like if you are getting an equipment financing agreement, the process is way different than if you were trying to get a business line of credit or you were trying to get a traditional business term loan. And by the way, besides the type of business loan you want to apply for, you also have to understand every lender has their own. They have their own business loan application processes. Okay, so but one thing for sure, if you are applying for a small business loan, you want to really understand that the lender is going to ask you for financial paperwork. That's for sure. They're going to ask you for operational paperwork. That's for sure. They might ask you for tax paperwork, right? But they also pay attention to your bank paperwork, your business bank statements. I actually know business lenders in this space that only care about your business bank statements. They only look at your deposits for the last 3 months, for the last 6 months. They don't care about your business tax returns, your financial statements from QuickBooks or Zero or Wave or whatever accounting software that you use. Right? They pay attention to how much money is coming into your account, your bank account, and how much money is coming out of your bank account. So your business cash, your cash inflows and cash outflows. So besides your cash, your liquidity movements, you also have to pay attention to the fact that lenders wants to make sure that you are a legit business. Because see, when you have a business loan, you're signing a contract with a lender, a business lender. The business lender wants to make sure that your business is legit, because something were to happen if you default, for instance, and they realize that, hey, listen, we signed a contract with a business that's not legit. That's a loss for them. So they want to make sure they have the possibility to sue you later on if they really feel like they have to recoup their money that way. Okay. So a legit business means what? You got to be an S corporation, C corporation, LLC, or whatever. And you also got to have the licenses, the right licenses to actually make sure that your business is legit. You got to file taxes. So you got to be really, and by the way, also you need to, your LLC, your S corporation, or your C corporation has to be in good standing. So when they call your state corporations authorities and they check for your EIN has to be in good standing with the state. So if you want to get approved for any business loan this year, you need to understand that the application review for your business loan may be fast or slow, depending on the business loan that you are trying to really get, right? I think I've established to you before that if you are going for an SBA loan, because the government is included, is involved, you can expect something from 2 weeks all the way to 6 months. It really depends. It depends on the back and forth that the lenders are asking you, or the lenders want to really engage with you in. Okay, but if you go for a traditional business loan from an alternative business lender, things can be as fast as 24 hours or 48 hours. 48 hours, you get funded. Okay, can be really fast. It's up to you to produce the required documents real fast. The faster you are, the better. Okay, so that's really good. If you go to a traditional bank, things tend to be slower, like 3 days to 7 days, depending on the bank, but also the requirements of their underwriting program. Okay, so that's important. You also want to make sure that as you review actually the loan, make sure that you understand loan terms and conditions. Okay, especially if you have a large loan amount, you want to make sure you understand the conditions and terms. And if you don't qualify for any reason for the specific loan that you applied for, you want to wait a little bit and apply later on. Okay, you don't despair. You want to read the decision why your loan was denied in the first place, and then you want to come back and reapply. You can reapply as often as you want, as long as you really learn from you are learning from every episode. You know what didn't work in the first time around, so you just wait before reapplying. That's pretty cool. So bottom line here is what? Bottom line is that this is an active process. If you want to get approved for any business loan, You want to be active. You want to be agile before, during, and after the application process. You want to engage in conversations with the lenders, be on the phone, okay, and ask questions and give them what they want in terms of paperwork. So, as an epilogue into this conversation, I spoke to you about how to get approved for any business loan. I gave you the top factors, the types, the strategy, and now the epilogue. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.